That's just how money works.
Right.
Interest rates go down, it just gets that much better. It's like interest rates.
Do you think they're
going
to go down this year?
I don't think they care. Yeah, we raised $5 million.
You say that as like it's no big deal. $5 million.
Well, we're going to raise more. We're going to have a second round of raising for 2 individual properties.
Okay.
So
what's the fund
it's
geared
just
towards?
It's just going to buy and sell real estate.
Okay.
Going to buy and sell real estate. It's going to rent some real estate out. It's just going to operate real estate. The 2 individual funds, one of them, we got a land lease that we're trying to get locked in, and then we're going to sell it to a fund that we're going to be a part of, because that'll be great with no debt on it. With debt on it in this debt environment, it's going to be a little sketch. And then the other one, we're haggling over some acres of land.
Is that the one you were talking about the other day about you're leasing out?
Yeah, so we have...
They're like bulldozing the building that's there just to build their own?
Yeah, we have a building, and...
See, I pay attention.
See, the big deals, like this deal would make so much money. It'd make so much money. But they take so much runway. That deal costs us almost $9,000 a month to own while it sits vacant, okay? And that's $120,000 a year in carrying costs. And yeah, that doesn't include the insurance, so it's a little bit more. But that deal right there, that particular deal, we bought it because it's like a 2x. Like you buy it actually it's like a 4x. So you can buy it and quadruple your money.
Okay.
But it's been so painful to own that now we got a land lease that's in place. Land leases take a long time to get established. Okay, so they come in right now today. We sign paperwork. They won't have to pay us until their business is operational. So they got to tear down a building and build another one, and they don't start making payments in them. But the lease itself has value. So we would fire sell it to a fund, to a group of people that have cash, to get that $9,000 a month off of our books, and then take a smaller piece of the upside. Okay. So, like basically, if we sell this thing to the fund, it gets established and it collects a year's worth of rent. You can then sell it for $2.5 million. So we could kick it to the fund at like $900,000, and then the fund could sell it in a year for $2.5 million. That's just how money works.
Right.
Interest rates go down, it just gets that much better. It's like interest rates.
Do you think they're going to go down this year?
I just don't think. I don't think they care. I think they're. I think if they cared about it right now, they would see that inflation's not continually rising. It's staying flat from, like, when did they reset it back to zero? Like this 6% that they're touting, the 7%, this 8%, this 9%. Where was zero at?
Yeah. Was
zero in 1995? Because that's not accurate.
Yeah.
Like 1995 inflation right now to today's 2x? Like it's 150%. So when did they zero it out? Because they should just hit that button again and zero it out today.
Would be nice.
You know what I mean? And just leave interest rates alone and just let's see what happens. Because
so you think that people that are looking... You think people that are looking to or making a decision whether to rent or to buy their own place, do you think they should just go ahead and buy?
I think right now they could negotiate some equity. I think right now they could, but even then we're in it every day trying to buy properties. People don't want to sell. It's had an inverse effect. People that have a lower interest rate, they don't want to upgrade houses. They'll just stay in the smaller house for a little bit longer. Yeah. They do not want to give up. It's a mental thing for them, but they do not want to give up that 3% interest rate to go get into a 6% interest rate.
Right.
So they're not going to do it. So inventory is scarce right now. There's going to take real blood in the streets for inventory to come back, and real blood in the streets takes layoffs. And they're already talking about raising interest rates until there are layoffs. So it just, I was
looking around in Lubbock. I couldn't really find anything that was either worth the price that they were asking, or it was a complete just remodel, and I don't have the time to put into a remodel like that. So anyways, it's one of the things that as far as real estate goes, I think we're in some sort of stagflation where prices stay flat, go down a little bit for the people that do need to sell. I think certain price points are going to be hurt more, and certain price points are going to be helped. Like if you got something for $150,000 or less, you got gold right now. Like that thing is liquid. An investor will buy it. Almost anybody will buy it. We're still moving that stuff. But if you're up in that $600,000-$700,000 price range,
that's just too much house for most people right now.
Right.
And nobody's looking to upgrade.
Thanks for watching that YouTube video. If you liked it, go ahead and like and subscribe, and check us out on TikTok as well, Roughneck to Real Estate.